Hi guys, today is Tuesday, June 23rd, and I'm back from my 2 days hiatus. I just want to get on here today and talk about the AI and tech stuff we've seen. As in the past 2 days, any company spanning from Asia to New York has pretty much sold off if they're in tech or in AI, and I kind of want to talk about why and what it might mean for the stock market and investors. As a lot of people on Wall Street, investors in general, really having a little bit of a reality check here and expecting a little bit of results out of these AI and tech stocks, and just instead of just looking at them for their names. As you've seen companies like Google who had a huge sell-off. They dropped over 5% in a single day, and this was after some news about a massive AI infrastructure build out, because investors are really worried about companies' capital expenditure. Like Google, for example, capital expenditures are at 175 to 190 billion, and Amazon flagged nearly 200 billion in capital expenditure, which is basically just the amount of money that companies are expending to keep their business running and growing. But along with this, they're also having declining free cash flows, which means they don't have any cash on their books. They can't pay for this debt because they keep fishing out to this debt, so they have no money in case something were to go wrong, which makes a lot of investors worry because of all the massive anxiety in the market and the volatility right now. It's pretty volatile out there, and if you don't have some money on your balance sheet, then you never know what could happen. These companies can go bankrupt like this. And along with this, the data from Bank of America has showed that only about 3% of their customers are actually paying for premium AI subscriptions. And I've seen plenty of people say that AI use is just declining. Plenty of companies have put out there that AI use is declining. As OpenAI, they just put out that their premium subscription, is declining. They're not seeing as much people subscribe for their services. So it's really not looking good, especially because if you're spending all this money and then you're not bringing it back in, like these AI companies aren't able to bring it back in with revenue, then you're just looking at a massive debt machine, which is not good. And especially with a lot of these companies, they've skyrocketed to like $100 PE ratios, and that is just a massive price to earnings ratio, and it makes their valuations look a little bit off-putting to most people, and that can cause people to sell off. You need it when investors see valuations that high on a lot of these fast-growing companies. It takes way less for a company to do wrong for an investor to sell. So if the company's not massively outdoing what the investor expects, then they're more inclined to sell off. Along with this, SpaceX, they plan to raise $20 billion through the sale of bonds, and they plunged 16% on Monday because of it. This spooked investors because it just shows how much debt that people have to take on to stay in the AI arms race, and how much debt all this is just taking. It's bad. And all these companies, if they can't produce some sort of earnings, they're just going to go into debt. It's going to be debt machines everywhere. And to top all this off, the Fed on last Wednesday, they came out and said that they're just not worried about cutting rates at all. They're focused on inflation, stopping inflation, and then they're not going to do anything about cutting rates. They stopped any optimism towards cutting rates, so that's never good for tech companies. They are fueled off of the idea of rate cuts because people are more likely to borrow and spend money, and it makes paying off debt easier because you can borrow money. And with inflation rates staying the same, with interest rates staying the same, and a possibility of a rate hike coming soon, that just doesn't mean anything good for tech stocks. And they've definitely shown all this craziness in the past week, as Nvidia's down over 4%, SanDisk is down 12 to 13%, Micron and Western Digital is down 9 to 13%, Alphabet and Amazon's down 5%, South Korea's KOSPI is down 4 or 10%, and the Nasdaq Composite's down over 4% in June. So, there's two ways to really look at this. Edward Jones and DeVar Group are arguing that the market was overdue for a pullback, and after hitting many record highs in these tech and AI stocks, which is true, they've been flying high for so long. It was eventually a time was going to come for a reality check and a little bit of a stock market rotation. And if that happens, it is what it is, and it's really not that bad of a case scenario for these tech stocks. But some strategists like Morningstar Wealth have warned that hyper-aggressive race to build data centers like this, and oversupply of computer power, and just not enough earnings for these AI companies could crash AI pricing in the near future, and we could see an AI bubble. So it's really just going to be a massive look forward to people expecting these earnings reports. This next wave of earning reports for these AI and tech companies is going to be so massive. Like Micron, they report this week. That's going to be huge. If we're not seeing massive AI growth and AI revenue, then things are just going to go south really quick. So you definitely got to be on the lookout for those things. As always, this is not financial advice, and be safe out there.